Hi everyone, it's Chat about another video, and today I'm going to be talking about Meta. One of the most interesting value plays I think at the minute. PE of around 12, it's now under a $400 billion company when it was once $1 trillion, right above its 52-week low of $140 at 143.5, down from its 52-week high of 360. It's been absolutely battered recently. I think perhaps unfairly, because this still is a company that has a lot of growth left in my opinion, even if it's not the fast grower it once was. And that is really the question here, is our investors recognising the transition of this company from what was clearly a growth company to now a value company? It is a mature business with excellent cash flows and revenues and decent growth potential. So I want to analyse it, go over its balance sheet, go over its valuation, and then talk about its future. Firstly, let's talk about valuation. Meta is trading at levels we have not seen as a public company. This is pretty much the best and lowest valuation Meta has been at in its history. A PE ratio on a forward basis for around 12. A PEG ratio of 0.44 is exceptionally low. While not the lowest in its history, that is still exceptionally low. Price free cash flow of 11. Price to operating cash flow of 7. These are all exceptionally low values for Facebook's history, and actually pretty strong values for its S&P 500 averages. I happen to believe that Meta is not an average S&P 500 company, has 80% gross margins, which is absolutely ridiculous and actually reduced for its recent history, a 33% operating margin and a 28% net margin. It's incredibly free cash flow generative. These are properties of a company that should trade for a premium to the market, in my opinion, and right now, for PE of around 12, that is lower than the average S&P 500 price earnings ratio, meaning that it's a discount to the market as a whole, a discount to, many old world companies trade that it's essentially dividend plays, whereas this clearly has some revenue growth left in it, in my opinion. And I really think this is a significant discount to the wider market, and objectively one of the better times to pick up Meta stocks if you believe in the future of this business. Next up, a discounted cash flow analysis. Now, of course, while we're stepping into a high interest rate environment, an inflationary environment where it's not a traditionally strong environment for advertising stocks, over the next 10 years I don't think this will persist. And average over that period, I think Meta platforms will be able to grow between 20 and 20% for its free cash flow. That is if the general advertising business pans out as they expect, and maybe a little help from Reality Labs, as I'll talk about in a minute. I'm going to go conservative for this DCF calculation using a 5% free cash flow growth rate, whereas over the last 10 years it averaged 46%. It's clearly not going to do this going forward. I think over the last 1 year, 15% is perhaps more accurate, but going completely conservative with a 5% free cash flow growth rate, which is essentially just the bare minimum you would want from any business really, using a 9% discount rate for long-term returns to the stock market. This gave a fair valuation of $173, significant premium over today's stock price of $142. It's starting to look like a relatively cheap investment based on a discounted cash flow valuation. Of course, this essentially means that Facebook is valued as having no growth in free cash flow going forward, which for the very short term is likely. Advertising revenues are going to go down if we go into a recession, as this just tends to be what happens. It's a cyclical industry in that sense. But overall, I think over the next 10 years, it can quite easily average 5% free cash flow growth if a couple of things go its way. And if you're investing in a stock, you really want a couple of things to go this way and some smart execution. Meta stock has steadily declined over the year with a couple of big drops, and one of those key drops was in the Q2 2022 results. As you're seeing on screen, they were down, revenue was down year over year compared to Q2 2021, where that was 29 billion down to 28.8 billion. Still an incredible amount, but you don't really want to see revenue going in the wrong direction. Also, net income was down. Operating margin has been steadily declining, basically because the Reality Labs is operating at a significant loss and will continue to operate at a significant loss to the tune of $3 billion around per quarter, which is quickly eating into Meta's net cash position. Of course, it's very, very hard to be a fan of this, and but I am certainly sceptical of the usefulness of Reality Labs and whether it'll ever pay this back. Certain people believe in that, and I think if you want to be a Meta shareholder, you have to believe in that Reality Labs is either going to be a successful thing or they're going to give up on it pretty quickly, scale down the spending and refocus on this business and getting their operating margins back up and becoming a more free cash flow generative business. Another clear challenge for Meta is potential competition from the likes of TikTok. However, that is really not reflected in the family daily active people. They've seen 2.88 billion. That's continuing to increase, not a massive amount, but this is essentially daily active users, nearly 3 billion. So we're talking 40% of the globe using Meta products on a daily basis. This is absolutely tremendous, peerless in this respect, and this is continuing to grow. And as long as you have a network that is as powerful as this, advertisers are going to flock to it, because it makes sense if you can target such a large percentage of the world. So I just cannot see the influence of Meta through its social media platforms decreasing significantly in the near future. Perhaps TikTok will gain some ground on them continually, but as long as they can continue to pay the creators so poorly, I really can't see them taking over the likes of YouTube in that respect. I think Facebook and Instagram still have a lot of moat, not to mention WhatsApp and the continued monetization efforts there, although albeit going poorly. Of course, while I mentioned I am sceptical, the Reality Labs research, which again is costing nearly $3 billion a quarter, does have a lot of potential, and Meta is clearly, via the name change and via what Mark Zuckerberg is speaking about so regularly, clearly aiming to be the number one player in a potential metaverse. Now, I can't say this enough, I am very sceptical about whether the metaverse will actually play out, what it will play out as, whether it'll catch on essentially, whether it's going to be basically 3D printing starts all over again. Everyone thought there was going to be a 3D printer in every room, and we'd be 3D printing buildings, etc. 3D printing everything. It just never really panned out, and it was a lot of waste of investors' money. Metaverse stocks very well could be that. Web3 seems to have gone very quiet now, the crypto crash and the potentially crypto winter coming up. But I think there will be a metaverse in some version or another, and the AR and VR headsets are here to stay. Meta is very much working to be at the centre of this, and while I believe they are throwing a lot of money at this, and a lot of it's probably going to go to waste, there is certainly potentially and a non-0% chance that Meta could be a leading company in a tremendously large industry. As I mentioned, there's a continued decline in net income, declining basically from Q4 21 to the present day. We saw still nearly $6.7 billion of net income per quarter is a tremendous amount, even for a $400 billion company. However, this is really going in the wrong direction for me, and it's basically due to the large capex spend on Reality Labs, and it's something where you are starting to lose faith in management if that doesn't start to pay off soon, because this is a tremendously large amount of money. They're doing so much hiring, even though that slowed down a little bit. At one point they were hiring a stupid amount of positions, and it just seems like I'm losing faith in Mark Zuckerberg, and I've been losing faith steadily over a long period of time, and whether he is the best operator for this business. This graph very clearly shows what's happened to the net income. Capex expenditure is rising dramatically. $13 billion in capex year to date in 2022. That is an absolutely tremendous amount. That is basically going on Reality Labs and not much else. And while they certainly still have the cash to fund this, over $40 billion in cash on the balance sheet with around $17 billion in debt, that's a cash to debt ratio of 2.52. Which is absolutely fine. This is definitely a balance sheet that is getting weaker over time. You can see the big declines. In 2021, they had over $60 billion in cash on the balance sheet. They're buying back shares at a tiny rate really compared to the amount they're spending on Reality Labs, and this again is a bit of a concern. I think Facebook generally is trying to hold on to its position as a growth company, whereas its valuation is really not befitting that anymore. Its valuation is befitting a company that is expected to grow 5 to 10% a year, and not even that really. I think the valuation has gone far below that, and that is absolutely fine to be a company that grows 5 to 10% a year, returns capital to shareholders in the form of buybacks, perhaps dividends. I don't think a dividend for this company would be the most ridiculous thing in the world, and just exists as that, grows 5 to 10% a year, becomes $1 trillion company again in 10, 15 years maybe. I think that is absolutely sensible approach for Meta going forward. I just cannot see this metaverse thing panning out the way they hope it will, and I think it's harming the balance sheet and the business in general right now. And overall, I think that is the overriding investment case. If you believe in the metaverse, then this stock is an absolute bargain right now, in my opinion. It is almost certainly going to be one of the leading players in the metaverse with the amount of money they're putting into it if it pans out. And at the valuation right now, if you expect the metaverse to provide decent growth going forward, then Reality Labs could be an incredible play. Of course, the AR and VR are still going to factor in some point, but I just don't think they're going to be materially needle movers for the business, essentially, if the metaverse doesn't pan out as we expect it to. This is still, the core business of this company is still a fantastic business, 80% gross margins, very free cash flow generative. This company is trading around 12 times forward earnings, $400 billion company nearly. I could see this getting back to a $1 trillion company in the next 10 years. Still think it's a fantastic business, a lot of potential. I think a 58% decline this year is a bit over the top in my opinion. I think this is probably a $200 stock if this was valued fairly, because I think there's just a lot of negative sentiment around this company. Yes, revenues are declining in the short term, but we are entering a recession. Advertising does not do well in a recession typically. I think this is definitely a business that will bounce back in a couple of years. I think this could be quite a good opportunity, but I just can't really get my head around investing in this company when they're spending so much money. It seems to be increasing quarter on quarter on the metaverse segment eventually, when I don't really think it's going to pan out as they hope. So again, that really has to be your decision. If you think it's going to pan out, then maybe you should be looking at a lot of this company. But of course, none of this is financial advice. You should do your own research and due diligence. I'm not a financial advisor, so you shouldn't just buy it because I say so or not buy it. Let me know what you think in the comments below. Like and subscribe when you enjoy the content. I'll see you again next time.